All right, guys, another Sunday scan coming at you, this time for November 15th. We are quickly making our way through November into the end of the year. So, make sure that you guys are making those changes that you've wanted to for the new year. We always have these New Year's resolutions. We always have these things that we're going to work on, but we, for whatever reason, decide we're going to wait and then delay it and delay it and delay it and start it on January 1st. But what you can do is start making those changes today so that when you do come into the new year, you can hit the ground running. There's no reason to just kick the can down the road and push those changes you want to make. You know what? Next year, I'm going to do this. Next year, I'm going to make this change. No, start tomorrow and continue on and build that new foundation for the year ahead. Start tomorrow, not next year. Couple things. Hope everybody had a great weekend. Real quick, anybody that's been in IU for a long time, anybody that's been part of the community for a long time, last week or the week before I had mentioned that Derek had passed away. I'd like to do something for his family. They don't need any fun. They don't need to do anything like that, but I think that we can come together and create a memory booklet. I really want some pictures. I've got some photos myself. We went on a ski trip. He's been to plenty of Traders for Causes in Vegas. So hopefully you guys can reply. I put a tweet and I've made an email, derekmemories@tradersforcause.org. Send in your photos, send in your notes, and we'll put it together and we'll send something out to the family so that they have something forever. And thank you to anybody that does participate and help make this memory great for them, or at least this honor. A couple talking points for this week. Last week we talked about leveling up, and a lot of people liked last week's video. So if you did not watch it, I know that the scan is every week is different and it's for that particular week, but as you guys know, the first 15-20 minutes is typically timeless and evergreen type content, so you can go back and watch that anytime. So if for whatever reason this is your first video that you have seen, go back and watch it. And I got a lot of feedback. There's always some of those videos where you have more either responses or engagement than normal, and that was one of those ones where people felt the need to reach out to me and say, you hit the nail on the head on that video. So check it out if you didn't, and let's get right into it. So this week, I think it was Thursday, gap and grind type of day. Always my worst types of days in the past. Somewhere where I start to get too aggressive too soon, try to force a trade, and I was actually pretty happy this time. I was ready for it. For me, it's hard to chase these big moves. What typically happens is we have some type of big pullback, and then it gaps up on low volume, pushes up again on low volume, and then it continues to grind higher. So for me, I like to sit on hands. So we spent a lot of time in the Traders Lounge on Thursday, and I didn't force any trades. I was really happy that I didn't force where I typically would, and I waited for those trades to come in. I started into a couple things, but I never scaled. So that was to me that's good. I'm doing the right things. I've patched those holes in my foundation that had cracks before, and it was good to kind of see. And I also got to see real time a lot of people that, it's just this desire to force the trade, and want to force that trade, find the trade, rather than letting it come to you. So I think that's really important to make sure that, you're waiting for these things to come to you. Don't just force it yourself. Next, consolidation. It happens. Expect it. So Lucid, LCID, and Ford, F, have been fantastic traders. But we're going to go into a period of consolidation. And maybe not this week. But maybe it breaks down, maybe it breaks out. Anything can happen. But don't underestimate the consolidation time. And I feel like because we had a lot of great trades on these names, you want to keep on going back to the well, back to the well, back to the well. And because you had success on these trades, you kind of feel confident and you size in more aggressively than normal because it worked the last couple of times that you've traded it. And so what I think that you need to be aware of is if it's stuck in a channel. And if it is, then relax, be patient, because you're just going to exhaust yourself out. And then, in a week when the trade happens, you're going to say, the hell with it. It was too much. It was too hard. And so I think that's what we're doing right now. Ford, I think, is in a consolidation pattern. Lucid is in a consolidation pattern. We've had all these huge ranging days. And when you've got the breakout, then you've got the pull back, then you've got the fast rebound, and then it starts to consolidate. You have to recognize that you're in that consolidation time before you start forcing things one way or the other and regret it. Also, I'm going to put some images up of the news chart and the PPSI chart while I'm saying this, ideally. But I repeat myself every single Sunday. Always look left. It is so important to look left on the chart to get information. One is where it might be a proper short. Two, it might be where you should not be shorting until, like where it could potentially go until. And so you'll see even on news on Friday how clean this trade worked off the prior tops. And the same thing, PPSI, just going back to the prior run. Look at where all the volume was. Look at where all the consolidation was. Look at the channel it was stuck in. And then as it pushed out on Thursday, I think this week, it went to the exact same level. So you knew not to get bent before it got to that level, or at least expect that it could go there, so that if you were trading on the front side, you at least sized properly. But I think the most important part is knowing where it can go so you don't pre-exhaust. And it's something that I repeat and repeat and repeat again because it's super important. I use it every single day. We got to pick Icon Meals winner. That is Funky Time on YouTube. So if you are within the US, you'll be getting a week's worth of foods shipped to you. If you are not, then we'll figure out something, whether it's IU or t-shirts or whatever. But just email me and we'll get that over to you. Last note before I get into some of the tweets, stop forcing the front side. I spent a lot of time in the lounge this week, and I think that the most important piece to understand for a trader, if you know you often get caught on the front side, just avoid it, right? Every single day, I post the key levels. Where is this stock continually coming back to and hanging around? Where's the congestion? Where's the consolidation? Where's the support? And if you don't see that, if you don't know to assume it's going to hold and cover and de-size, it's okay to, start into the trade, scale into the trade. It's okay to have some size if you know what you're doing and if you behave. The problem is most people don't behave. When they're faced with that spot to cover, they'd rather kind of, I'll see what it does. And by the time they see what it does, by the time it reverses, it's too late and it thins up. And that was the problem this week with a lot of these trades is as soon as it stops going down, if you weren't part of that cover, if you had any size, you can't swipe, you can't get out, and it goes right back up. And I understand, for some, yeah, you can get out a couple thousand shares here and there, but as you progress as a trader, as you have more and more size, liquidity becomes more and more and more important. And when it stops going down and there's no offers, it's very hard to get out. So although it might look easy and it might look like you could have gotten out, a lot of times there isn't liquidity to get out, especially in this market, especially with so many shorts and so much demand, so much volume. It happens quick. So know your weakness. If you are not good at proactively covering, just forget the front side of the move. There's so many names that you can trade that are not on the front side, that are not trying to find the top, that are not fighting the trend. So think about that. And, I think it's important to, just kind of the thought process behind that is you want competition on the offers, right? So when you're on the way up, it could be thin, 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 thin. There might not be that much competition. There might be, it might be ramping up on very minimal volume. You want competition on the way down. You want to be trying to maybe add to a short and it fails to fall through. You miss it, you miss it, you miss it, and there just keeps on coming. The offers keep on coming lower. Same deal on the long side, right? Often when we trade, we never have enough, right? It's always like, I didn't add enough, right? That's because you're on the right side of the trade. That's because every time you look to add, it doesn't get to where you want it to add to because there's demand. And then the next dip, it doesn't come to your bid because there's demand and you're on the right side of the trade. Recognize that. Recognize every single time you try to add that they keep on kind of outbidding you, getting above you. And that to me proves that I'm on the right side of the move until that starts to obviously go to the other side. And then you take note, and if you're oversized, scale back, and so on and so forth. So let's get into some of the questions. I had one tweet that I had posted, and it was a reminder that your trade of the year can come at any time, as long as you are respecting your process and risk management, it'll come. And, we talked about it last week about, sizing up and being able to identify that A+ opportunity, that size up opportunity, that getting to the next level opportunity. Most people don't want to just keep on, going and going and going. They want the easy money. But I promise you, if you keep on doing the right thing over and over, at some point it'll come. And, just like this week, BTB, it's been a swing trade for me that I, posted in the room at 120s that, it felt like there was a trap happening. Ramped up. It should have died multiple times, and I took a chance, and I felt really good with the risk. The downside potential risk versus the potential upside if what I was seeing was true. And on the realized portion, it's my top 3 trade of 2021 so far, and I still have a position. That's the unrealized portion, but the realized is already there, and that's not me forcing the trade. That's me just taking the same trade over and over and over again. And when the trend fails, I size out, I size down, I move on. And when the trend works, I let it work. I let it go. And, I didn't plan on that. I didn't plan to have one of the top trades of the year on Friday. But it came. And it was by doing the same thing over and over. And then voila, it came. So tweets sent in. First one, income versus wealth. I find myself always selling too soon to lock in profits for fear of giving back. Is there a general level money amount where you should make the switch to go for bigger picture plays? Still kind of in the account building phase. And I think that's the most important thing right there. You're in the income stage right now. You're in the get the account as big as you can. Just keep on doing it. If it's working, keep on doing it, keep on doing it, keep on doing it. There is a point where you start to get outsized for particular small cap style moves. There is a point where you start to become your own risk if you start to size in too much on some of these trades, and you start kind of competing with other people that are doing the same thing. And for me, I realized there was a lot of headaches. That's why you don't see me attack the front side of the move as much anymore. I don't care about getting that small scalp on the front side of the move. I care about getting the big money, the big picture move. And so I think if you're in account building mode, that tells you right there. It should be focused on income, nail the trade, move on, nail the trade. Keep on building as far as you can. And then as you no longer need to build that account, as you're comfortable, as you have some, rainy day cash, start building that wealth. Start looking for bigger picture type opportunities. Start letting the money that you've made work for you while you still do some regular income type trading. Next one was when you add to a winner and the stock immediately goes against you, how are you so comfortable taking the add off for a loss knowing you ruined your average? And I tend to make emotional decisions, errors in such cases, and need to improve on it. Sounds like you probably don't want to take off a particular trade because you think you're gonna ruin your average. For me, it doesn't really matter, right? We're day trading or we're short-term trading, so the average doesn't really matter. It's the goal is obviously to protect the average as best as you can, but it's not really about that for me. It's more about the bigger picture kind of opportunities. So if the stock's gone up and you've sized in some and you end up taking some realized gain, keep in mind that does the average is different, but you've also got a realized gain there. Or you've got an unrealized loss and a better average, it all balances out. So if the trade is right, it doesn't really matter, right? I think that the only reason a average, I guess, works or matters is if you're lot selecting it and things like that. But overall, I'm looking at the big picture idea for a particular trade, and it's not something where you're really ruining the average that much unless you're just chasing these huge breakouts. And I think if that's the case, then go back to what I've said previously. Pretend you're not in the trade. Would you be chasing that crazy breakout, or are you just chasing that crazy breakout because you have this big padding and you want to scale into the trade and you're like, all right, well, I've got this huge padding. I'm just going to buy this random breakout. That's when you get in trouble. That's when you ruin your average. And that's when the emotions come in. So, I did a little bit of that this week on Tilray, CGC. I had some decent positions in that. I had a great entry maybe last week, and then I started to go, and I added into the winner into strength for whatever reason. And then it started to pull back, and I was like, oh, you know what? Now I've sized in. I don't want to turn this into a big loser. So, I got out. And then obviously Friday was a huge breakout day. So I did similar where, I kind of did not pretend that I wasn't in the trade, and I just kind of was adding to add because I had a good position, I had a good average, and that was a perfect example of kind of what you're talking about. And so because of that, it wasn't necessarily an emotional decision to sell, but because of that, I did sell because I didn't want to turn it into something dumb or silly for a loss. So yeah, I ruined the average because now I'm long still and I have a higher average, but it's fine. I did what I did to feel comfortable. But at the end of the day, this is a new trade, a new kind of trade plan, and that's that. Moving into that, the thoughts on the weed sector, I put that one up there because I've got 4 or 5 names in scan tonight. Overall, I love the look of the weed sector. It almost feels like there's a lot of money rotating into this sector, so I'm going to have a very heavy eye on it. I am positioned, I think, in just Tilray at the moment, but CGC, Cron, HEC, all those different names, I'm interested. And I'm interested in dips if they start to build over the next week or two, and then potentially some type of longer term. Think back what we just saw on Tesla and Lucid and F and all those. I'm thinking something like that where I'm not looking to position for a quick momentum trade. I'm looking to position for something maybe 3 to 6 months out. And last couple things, somebody had posted short the first green day, question mark, parabolic moves, and so there's plenty of opportunity. For me on parabolic moves, it's got to be a huge float. I don't want to be shorting low floats, million, 2 million, even 3 to 5 million shares. I'm not interested. There's no need to try to find the top in this market. That's fine if you trade small shares and it works for you. But as you size up, you don't want to be messing with that. Let the trend shift. And it only takes one to kind of catch up. So for me, especially in this market, I'd rather let everything kind of show me first. And I don't care about the top, right? When you get the top, you're not really getting much size. I mean, if you are, then it's reckless, right? you should be scaling in my opinion, after that transition happens, after the edge is on your side, meaning it's gone from a thin tape to sellers, 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 and you've got that confirmation. So be careful with parabolic moves, in my opinion. But first green day, it doesn't matter. You know, it's all about the opportunity. There's plenty of stocks that go up and come right back down on that first green day. So to kind of have a rule that you never short first green days is, in my opinion, I think you're missing out. And there's plenty of solid risk reward type of trades that do happen on the first day. And I think we just even had CYT up, first day gap up. You know, if you avoided that, you almost had $1 per share fade. And that was not a reckless trade. That was not, just kind of shorting the first red day, reckless mentality. No, it was fail follow through, pressure, a lot of selling, and it was just a steady trend down all day. So no, I would not avoid shorting the first green day. It's all about the setup and letting that trend form. But if you're the person that's trying to find the top, then yes, I don't think that's smart. All right, YouTube winners, Lee, Peter Bennett, and Sean Carmody. You've got the t-shirts for this week. As I said, we've got a lot of inventory. We printed out a whole bunch of shirts. So I am going to just keep on giving away a bunch until the end of the year. That's that. So let's get into Scan for the week ahead. All right, guys. So for the second part of Scan, once again, I'm not a financial advisor. These are not buy or sell recommendations. This is for informational and educational purposes only. If you're not okay with that, shut the video off. If you're okay with that and you want to get an understanding for how I prepare for the week ahead, what kind of goes through my head when I am looking at these particular names, what I feel is good risk to reward type of setups, then by all means continue. Thank you guys for watching. As always, leave a like and a comment. Put your key takeaway. Key takeaway can be the timestamp and whatever it is that said, or made you say, aha. And the reason we do that is because we make a lot of little micro content type pieces based off your feedback, based off your replies, and your comment could help another trader. So I appreciate everybody that does take the time to do that. It only takes a couple seconds. Again, thank you. So this week, for the week ahead, it's another one of those where I'm not, it's super excited for anything, where I'm not looking at this OCGN setup from last, the prior weeks and saying this is A plus. The magnitude of this opportunity is massive. I don't have any of those this week, but there is a lot of opportunity, and it's about just kind of waiting for either those big trades to set up throughout the week, or just taking big opportunities throughout the day and leaving these crazy runners alone. MRAM, perfect example of understanding what a proactive cover is all about. We had a killer trade opportunity, a lot of action. You can see throughout the day there was a nice little base forming, and I'll just put a couple lines just so you can kind of see it. But you can see a base forming over here, and then the swipe comes all the way back down, and it retests right back to that prior level of support. So this is what I'm talking about. If you're not good at proactive covers and you're looking at this thing, you've got a great average, you're like, you know what, this is great. I have a good average, I'm going to let it work. Then guess what? Pops all the way back up to the highs, and you missed it. There's no liquidity for you to get out till the top. And then you either have good risk management and you cut it off and then you realize that it was the top, or it continues to go and you end up getting smoked. So then you can see the same thing over here again. We had a nice big squeeze out. This is what we talk about as the sort of the Goldie setup. I talk about it every Sunday Scan, where they're creating this fake ceiling, where they could either do one of two things. One is they just pull it and they immediately stuff and it slams, or two where they just kind of let it filter out all the people that were shorting based off of this top that was forming. The cover comes in, they let it work, and then the bids are gone, right? So in this case, what happened, in my opinion, is they did not get the volume that they wanted. They did not get the exit, so they ended up having to slam it down and then create another trap. And they created another trap at that VWAP level. We talked about it in the room where 980, I mentioned in the room to focus on that repeat buyer. They kept on soaking 20K, 20K, 20K. Every time it got hit, it would refresh another 20K. And so, as you can see, it ended up squeezing out into the close. Super tough trade. You know, there was definitely opportunity, but you had to trade it right. But the good part about this is it's going to be a nice trade on Monday. In my opinion, you just have to be prepared for two things. One, was that the exit? Did they blow everybody out into the close? And if so, then there's probably going to be a gap down, and maybe it's, you know, 1080s, 1060s, and it fades off into the 980 range. Or, you know, that would be one way. It ends up having a weak open. And so if it was a weak open, I'd be looking at that 980 level. And the reason why I want the 980 level is because that's the prior level. That's the kind of the consolidation area. That's also the VWAP level for the day on Friday. So weak open, potential reversal. We saw a lot of that action on EVGO this week. Otherwise, the other thing too is when they do have that big squeeze out into the close, and you know there's a lot of exits, a lot of covers. Sometimes they'll still gap it up the next day, but just remember the key levels, the key spots where there was inventory and where there was selling pressure, and it'll come in very quickly. You want to assume that those levels will hold until they prove otherwise. Otherwise, you're just gonna, you know, end up getting bent, and it's not worth it. So reactive trade, come in with two plans. I'm not biased long or short. I am just attracted to the amount of volume, which is nearly 100 million. There's gonna be a nice trade for the next couple days here. We will find it, but for me, it's either a weak open, red to green rip, or a gap up, parabolic move, and sit back. I think that 980s and 1040s are going to be key levels for the day. BTBT. So top 3 trade of the year on the realized already, still positioned in, and you know, hopefully this continues to go crazy. Just absolute perfect. Saw the trap. We talked about this in the room, and you know, the big part that really got me interested was if you looked at each day, you know, it had this like gap up, and then it faded off. And what really interested me was right here, this volume, right? So somebody came in a million, another million, 1.5 million, 1 million, and 1.5 million. What it was, who knows? Who it was, who knows? But something's interesting about that. And from that day forward, it stayed extremely strong. And when it should have died, it didn't. It was, you know, there was a lot of pressure. Each time it would pull back, you know, in the mornings it had these almost like I would say a fake parabolic move, and it was a pre-market. Which day was that? This day? Yeah. Pre-market, ramps up, pulls back, ramps up, pulls back to the lows, ramps up again, pulls back to the lows, and it actually went to the lows that day. Right over here, you can see it went all the way back to the lows and then swiped up. And it held a trend. You can see that, again, looking left, you can see that it based at the 180 levels. It should have died, but it was holding extremely well. And then we had the 8K or 6K, whatever it was, after hours of the raise, and it went right down and then came right back up, and you can see the same kind of trappy action. So at that moment, right when it did this flush out and came right back, I compared it to the Pets situation, PETZ. And as you guys know, Pets did a really cheap raise, and then they had 200% warrant coverage, and shorts just got obliterated. And you can see that right here, right? So flushed down, squeezed out, and now, they're obviously trying to close it over 6. If you spent any time in the filings, you'll know why. By the way, that's a hint to go back and reverse engineer what the filing was on pets if you are so inclined to further your study in, deep financial, filing reading. But same kind of concept. And, this one's even thinner. And it held. Should have died. They put the SSR on. Should have died. It ramped up, faded, and it's still, you can see there was a bidder in there. It was holding all day, and then all of a sudden, after hours, it went nuts. And I wasn't around for the first swipe, but somebody told me there was a 500K bidder. There was a couple 100K bidders, things like that, and I mean they were taking it. They brought it all the way back down. They trapped again, swiped it to the highs. Then they let it die off. SSR was on, by the way, so they were kind of getting this pressure, just letting shorts pressure it down. Meanwhile, they're soaking, and then they're just like, nope, just kidding. Back to the highs after hours. So to me, that tells me Monday's going to be insane. Maybe not. I'm biased. I'm still long. I already said that I've realized a lot. It's my top 3 trade of 2021. On the realized portion, I still have about 30 to 35% of my position. So I needed to de-risk because it was an outsized position already. And, that's why I did that. But based on the volume, based on the action, I mean, this thing's setting up for, it could do anything. So probably a lot of circuit halts, depending on what it does at 4 a.m. to 7 a.m., whether or not it holds strong at 7, 8 a.m. Or I may be dead wrong and it was just a fluke after hours. But in my opinion, they set this thing up. Perfect opportunity, and congratulations to anybody that participated. ZKIN. This one's got a catalyst on Tuesday, the 16th of November. So I had been watching this one every time, YVR and OCG and TCAT, this one had a massive run with all of those, but then it did nothing. And it just completely died off and faded off, and it hasn't done anything since. So it's due for a run. It did get the volume back, but I'm not really excited about it until it proves that it wants to break over this prior, level of resistance. So to me, if I want to scale into that trade, if I want to, see this thing, really rip and put money behind it, I want to see 310 start to build. Have some real volume, and maybe see one of those 10, 15, 20 million share type days. But catalyst plays have been working extremely well, so that's why I am interested in that. And like I said, it has not run in quite some time, and when it does run, obviously you can see it goes crazy. So maybe not, but like I said, we talked about BNGO. No, not BNGO. Yeah, it was BNGO. No, it wasn't. BBIG. It's late. I'm actually recording this on Saturday night, so I don't have to do it tomorrow. So BBIG, same kind of concept where there's a catalyst play, right? It was into the vote and into the dividend. So same kind of concept as the time that I explained that reason for that swing. So for me, it's 270, 280 risk versus the potential trigger of 310. Could go 354. If it really gets momentum, then obviously it could go crazy. But for me, I need to see that 310 really start to build, and I need to see real volume. All right, moving on to failed follow through momentum. CYTO always ramps up, always fades back. That's nothing that you should ever take for granted and assume that it's going to happen every single time, because that's when you get in trouble. But you can see, like we always talk about, look at this, kind of channel forming. You can see the base here. You can see the peak kind of right over here. So pretty much like a 310 to 290 type of channel formed. Then you can see it breaks down. Doesn't necessarily mean it's a short yet. Comes back, retests that top or that bottom of the channel, and it fails. So at that point, I like to scale short and risk towards that line. If I start to scale in more and more and more, any flush is a cover for me. You know, at this point, I'd love to see a 240, 250 open, you know, some type of push, and then continued failed fall through momentum. The only other thing that I would take into consideration is come Tuesday or Wednesday, if this thing is holding trend, keep an eye on it. Because a lot of these, especially with volume like this, 200 million shares, a lot of these have a big cover coming in a day or two or three. And then you end up having, you know, stuff like that PPSI where, you know, it doesn't really look like much, but that was a big move. You know, that was 687s. This day it goes all the way back up to 10. You know, almost back up towards those highs. And, you know, it's a big opportunity for a trade. So you can kind of see how that reacted here pre-market. So that's the concept. CYTO come Tuesday, Wednesday. If it starts to go, I'm interested for that momentum trade and then move on. Next up, NVTS, higher the better. This one's an interesting trader. Nothing that I care about yet, but it should look familiar to the IONQ trade that we talked about last week, where I wanted that 20 to 22 run and then fade, and we ended up having exactly that. We had a lot of good trades this week, and you can see that each day it did get bought back up. So once again, it's the importance of, if you're trading the front side of a move, make sure that you're locking into those flushes, because you never know. It could come right back up, and that's been happening a lot. So NVTS, it reminds me of this. It does not mean that I am short biased, but I am looking for that overextension move, and then when I see failed fall through momentum, I'm interested. Saba. This one just smells like it's going to 40. It had that hit piece out, the negative article, and then they had halted it for data or whatever they did, some study. I don't remember even at this point. There's just too much news every day. And then I think that this was just a result of, you know, shorts heavily positioning the day before, squeezed everybody out, and then it's been completely coming apart since. So I'm kind of the mindset that this is going to continue to unwind back to where it came from, potentially take out the lows. So I'm going to be watching that one. Nothing I'm too, you know, crazy excited about, but if there is opportunity where it pops up $2 or $3 during the day, I'm going to be looking for the join of the fade. But to me, it just smells like there's a huge seller in there. So then switching over to the long side, BRLT, I'm going to be watching to position in on dips. I think I started in a little bit. Actually, no, I didn't. I wanted to, but I didn't get there. I was thinking that I put a few on, but I don't have my E-Trade up right now. But I do. I'm not there yet. So I'm looking for 1780s, 18s. You know, potential pullback, consolidate. If it starts to build, then I'm interested in positioning in. GGPI, nice one. I do have a position on this one, just small. I sold about 75% of the trade. Fantastic alert in the room. You know, the Insta blogs have been, you know, sometimes you see these things ripping up and you start to kind of look at why is it moving. And lately it's been Insta blogs, and normally it's, you know, those are like a dime a dozen and who cares. But lately it's been really moving names. And so AGC, perfect example. And this was a Insta blog this day, RDBX, same deal this day right over here. But the thing is a lot of people just downplay these Insta blogs, which, you know, rightly so, they should. But then they start shorting them. And there's just so much demand in these markets right now that, sure, they are rightly shorting it. They probably should be shorted. They probably shouldn't be up. But the demand is there, and then they end up getting popped. And I think that's exactly what happened, again, on GGPI. And we had this huge breakout and, you know, killer so far. So great alert. Great find in the room, and hopefully there's a little bit more action there. Great volume, 40 million shares. So we should have, if, you know, hopefully it blows off 14, 15, 16, and then maybe it comes all the way back to 13. We'll see. But, you know, one step at a time, and I'll be prepared. We've got OPAD, This one's been kind of steadily basing, so I'm going to be watching for a potential reversal trade. I have a very small position, mostly just to kind of remember. If it starts to go, then I'll scale into it, but I'll be watching if 850 starts to base. It has not had a move since this huge move, so that's kind of what has got me interested. Same thing with FCUV. I actually positioned into this one in the 820, 830 range, and then it consolidated, and then it ripped to over 10. I didn't take any off. It was a nice $2 per share move intraday, but I wasn't really, I wasn't prepared to sell at that point. I wasn't really thinking. I was thinking more of a big picture. If this starts to go 9, 10, starts to base, then maybe it continues to go on like we saw on like this ARQQ kind of reversal where it goes to 20 bucks or something. But so far nothing aggressive on my position, but I am looking to see if this starts to go. But same thing, OPAD, FCUV, more of like a 1 PROA type of, I want to be familiar with the setup. I want to be familiar with the chart so that when and if there is any PR, when and if there is a breakout or volume, I'm prepared. PTPI, this one is one that was a huge one. I think we talked about it last week, but I ended up overstaying on the rest of it, so it's a bag at this point. But it still does interest me because of this high volume day, so I still do think that somebody positioned in this day. And then if we get another PR, if we get another move, if 250s proves to be, top, if it doesn't break, if it doesn't continue to firm up, then I'll bail on the trade. But if it does, if we start to see some type of follow through, then I think that there might be a pretty nice opportunity given the fact that we had almost 300 million shares that day. It reminds me a lot of this BMRA trade, which I just don't know if there's going to be a follow through or not. Very similar situation, huge volume, and I was positioned in this trade too. Had a great trade, but I kept some on just because I had such a big realized, and I was like, I'm going to keep a position on just in case it continues to go. And similar situation, it just kind of had failed. So failed rather. So it started to kind of shape up over here. I'm starting to pick away at dips. I don't want to chase any breakouts, but the last couple days it's been steadily kind of trending, and then it just tapers off. And when I see that a lot, sometimes that's I call it like a cleanup mode, where they, if you're long and it just comes back to the lows every single day and does it again and it does it 3 or 4 days in a row, you're going to say, you know what, screw it, I'm out. And I feel like it's that cleanup mode, and that's what we've seen. I remember FLGC, they had done that over here. You can see before they had that initial that big move. So just keep that in mind. It's not something to chase breakouts or anything like that, because you'll end up in a bad spot. IFRX should look like my favorite setup. I go over it every single week. You've got that huge volume, and then you've got the wicks. So far so good. I was in there. I had sold some. I had a position. I sold the rest of it, and then I repositioned on Friday for that breakout. So that was pretty nice. That was a good idea on the scan. ASRT, I was here. I am not anymore, but notable action. You've got the big volume, and you've got the trend continuation. So I'll be looking to position into that if it continues to hold over 150s. And then KULR, you guys know the same deal here. I've been letting it work. I think I've made it past the hard part. We'll see. I'm positioned in from 210 as we went over. That tweet that the company put out a tweet right at $2.10, and that's when I initiated the swing trade. And this was one of those gut check moments, and I think I've made it past the hard part. So hopefully it starts to break out and speed up a little bit. The other key was obviously that $3 break that we talked about. So the fact that it ramped up, came back, kind of rechecked in, and then it's back to the highs, to me, that's great. Last but not least, VERU, no position, but you can see why I'm interested. Starting to set up pretty nicely. So if this sets up for a 10 breakout, I'm interested. And that's pretty much it. I do have, my normal staying familiar section. I do have, the pot stocks on scan. It does look like this bottom formation over here. You can see the initial cleanup starts to come back in. Next leg fails, and then, the gap up and continuation. And so to me, that means that sector is ready. So I'd want to see this overall trend hold. Not necessarily, it doesn't need to be green every single day, but I want to see this general breakout hold. As long as it, holds the recent lows, then I think that we have potential for a nice big reversal trade for the short term into the medium term. So we'll see what happens. I always like to assume that everything's going to fail, let it prove otherwise, and then scale in as it proves. So that is about it. If you guys have any questions throughout, you know the drill. You can always just leave a comment, reach out to us, and if you have any questions about Investors Underground, Cam at investorsunderground.com can help you out. And otherwise, we'll see you Monday in the room.